and welcome to a brand new episode of Market Manthan powered by ZBiz.com. Well, my name is Kshitij Anand, and today we have a very special guest with us, Marc Faber, who is editor and publisher of the Gloom, Boom, and Doom report. Well, famous for his contrarian approach to investing, Marc Faber does not run with the bulls or bait the bears, but steers his own course through the maelstrom of international finance markets. Well, a man who predicted many financial crises has something interesting for India and overall equities as well. Well, without further ado, let me welcome the legend. Welcome to the show, Mr. Faber.
Well, thank you very much for having me. And first of all, I wish all your viewers and yourself, of course, a prosperous new year with a lot of satisfaction in whatever you do, and with hopefully more of an absence of vicious governments that want to enslave people with all kinds of measures brought about by a COVID virus.
Thank you so much for your kind words, Mr. Faber. Well, let me start with, how equities are looking, especially for India. We saw over 22% kind of gain. In fact, for US markets as well, we saw 26% kind of gains for the year 2021. So do you think there is a bubble building in equities, not just in India, but across the globe?
I think there are very speculative excesses in just about any asset market.
Okay.
Whether you look at the art market, at collectibles, you see, because of the money printing, everything has gone up.
Sure.
With a few exceptions. I mean, I look at commodities. Commodities inflation adjusted are still very low.
Okay.
Or if I look at real estate, there is very pricey real estate in Mumbai and in Delhi.
Yes.
And in Munich and in Zurich and in London and Paris and New York and so forth, Hong Kong, Singapore. But then there is very inexpensive real estate in the countryside somewhere.
Right.
And nowadays, you and I, we can live in the countryside. I happen to live in the second largest city of Thailand, which is Chiang Mai. But it's still a very small spot in the international universe. And from Chiang Mai, I have my Bloomberg with me. I get all the news. Yes. At the same time you get it, and someone in New York. So I think that the concept of investing in real estate will be less, in which city or which country, but within a country, in which places is there value and where there isn't any value. I think city centers will have less value in future than in the past, because the whole financial market is nowadays an international market. You can be Newport Beach or in Zurich or in St. Moritz or in Mumbai, and you can trade the assets around the clock worldwide. So we have excesses, but in these excesses, as I said, if I look at the markets, there are markets like the US. We talk about, say, the US or even India. Right. Some stocks in India are expensive and they have gone up a lot. But among the maybe 10,000 or 15 or 20,000 shares that are listed in India, I'm sure I could find you 10% of companies that are very inexpensive because they've been neglected.
Right.
Nobody has analyzed them. Nobody has really gone and looked at what is the value of the company and their assets and so forth. And there are lots of companies in the world, like in Hong Kong, I can give you, say, 70% of stocks in Hong Kong sell probably at a 50% discount to net asset value.
Okay.
And these companies, I give you an example. China Mobile is essentially the largest mobile phone provider in China.
Right.
It's selling at the yield of 6%, dividend yield. So I don't really care whether the stock goes up a bit or down a bit, but I get the 6% a year, which is a very high return in a world that is manipulated by brain damaged central bankers in Europe and in the US.
Right.
Fortunately, not in India. In India, the Bank of India,
the Reserve Bank,
I think, is very reasonable and surprisingly has been very well run. I have to make a compliment to India that the last two central bankers have been really normal people, not mad like Lagarde. In Europe, inflation is like 8% per annum and interest rates are at 0.
No, absolutely. So we'll take that as a compliment to our RBI governor, and definitely.
Yes, I hope he will listen to this program and keep monetary policies relatively tight.
Absolutely. But I'm sure the US Fed also signaled some rate hikes or monetary tightening in the year 2022. So how are you looking at that?
You are an optimist. You are an optimist. I want to tell you something. The last time inflation was as high as it is now in the US and in Europe, interest rates in the US were over 12% per annum. And say you believe the statistics by the government. So inflation is running at, say, 5% per annum. That is incorrect because the CPI measurement has been changed over the years repeatedly to understate the cost of living increases. It's running at the present time. Some people say at 12%, some at 15%. I say between 8 and 12%.
Okay.
Because it depends, do you have children? You don't have children? Do they go to school? They don't go to school? Do you have to go into a hospital and so forth? So many things. Your basket of purchases is different than mine. True. Mine consists mostly of cigarettes and beer. And yours is maybe whiskey and whatever. So anyway, every household has a different profile in terms of their cost of living increases. But in the US and in Europe, it's between 8 and 12% per annum. And the interest rates are next to 0. And in my view, the last time they tightened was in 2018, 2019. Already at 2.5%, they got into trouble in the repo market. So they started to slash interest rates again in September 2019, long before COVID. COVID didn't produce the monetary easing. It was a tightening in the money market.
True.
Anyway, in my view, what interest rates should be today, minimum 6% in the US.
Okay.
That they
minimum
would be,
6%.
Yeah, that they would be positive in real terms.
Right.
As you know, we can measure the rate of inflation. We measure interest rates. Differences between real interest rates that may be negative as they are now, and real interest rates as they were positive between 1980 and essentially year 2003. This was a period of positive, the real interest rates, because interest rates were above the rate of inflation. This has changed now, and it's so negative. The real rates, I don't see how in Europe and in the US they could increase it sufficiently.
Well, yes, I think the time will only tell, but at this point in time, it looks like Fed is slightly more hawkish at this point in time. But so, yes, we'll keep our fingers crossed how that goes. So energy prices are in an uptrend. What is your view on the precious metal space as well?
Well, the precious metals, as you know, have been in a long-term bull market
Okay.
and have reflected the depreciation of the value of paper monies around the world. So
Okay.
in 1970, you could buy an ounce of gold for $35 an ounce, and now it's around 1800. So it offsets kind of the depreciation in the value of paper money.
Sure.
I hold, of course, a lot of precious metals. I have maybe close to 25% of my assets are in precious metals.
Right.
Of course, because I'm in this business, I watch the price every day, but I will never sell my precious metals unless, and this is an issue that investors have to realize, governments around the world could come one day and say, you must sell your precious metals.
Okay.
It's possible. The way they can come one day and say, well, cryptocurrencies are not accepted as currencies. They can do that.
Right.
They cannot eliminate Bitcoins,
True.
but they can make it a crime and a felony and a fraud to deal in Bitcoins.
Right.
You understand? It's not likely they will do it, but it's a possibility.
It's a possibility.
And the second problem the cryptos have compared to gold, silver, and platinum is the quantity of Bitcoins is fairly determined. However, if tomorrow someone comes with a quantum computer, he could increase the quantity meaningfully.
Right.
Number two, the quantity of Bitcoins is, say, more or less fixed. No quantum computer can change it, which is a false assumption, but it's something somebody could argue at least in the next 6 months. To this, I can respond, yes, this is true. The quantity of Bitcoins is fixed, but the quantity of new cryptocurrencies that are being created all the time is not fixed.
It's not.
So we started 4 or 5 years ago with just one Bitcoins, then came Ethereum and so forth. And now we have thousands of different cryptocurrencies.
True. Right.
So I like gold. I think it's relatively depressed, given all the quantity of money that has been created.
Okay.
I think it should go higher, as well as silver and platinum. But I don't know about the price on a day-to-day basis, because there's a lot of speculation, not so much in the gold market. I guess that's also in India, that the young people buy the more speculative sector of the market and not old value stocks and so forth. So they've been selling that. And so there is been pressure on all asset markets.
Okay. No, I completely agree on that. And wanted to check with you, which are the other markets that you like at this moment?
I mean, I want to tell you what I think is inexpensive. I think some of the Asian markets, like Indonesia, Malaysia, and especially Hong Kong, I think Hong Kong is inexpensive. And I would say you should look, I mean, outside India. I'm sure there are in India still great opportunities, I would say, in real estate in particular, and in art and antiques. But I would also look at Latin American markets.
Okay.
The very depressed Brazil, Argentina. And then we have sectors. If we look at the world, you have the Googles that are expensive, Apple is expensive, and so forth. But you look at telecom stocks, telecom companies, whether in Europe or in Asia or in Latin America, they have been in a bear market for the last 5-6 years.
Right.
When actually global markets went up, they've been in a downtrend. So there I see some opportunity.
Great. I think, Mr. Faber, it has been an insightful conversation with you. And with that note, I think thank you for your insight on markets and global as well as commodities. Well, that's all for now, folks, but do say log on to zeebiz.com for more news on business and economy. Thank you so much for your time, sir.
Well, I thank you very much for the interview, and it's always nice to talk to you. And
thank you so much.
I wish, as I said to your readers, your viewers, all the best. Thank you.
Great.